Hello and welcome to Wall Street, where we elevate you. So, 2022 did not turn out as good as most of us expected after all. The market is clearly showing signs of a major crash like the 2008 crash. 2008 economic crisis did not only crash the entire US economy, where huge corporations such as the Lehman Brothers went bankrupt, but it also took down the rest of the world's economy with it. It was like the domino effect that led to the euro debt crisis. However, in a few years, the economy recovered and the United States experienced the longest economic expansion in its history. Over a decade of economic expansion, but as a wise man once said, whatever goes up will eventually fall. So did the growth in 2020. But government spending kept the economic wheel spinning. The only problem with the current crisis is that the bubble has been growing so much that we are now at the point where we no longer can postpone another crisis. In the middle of such a panic, most retail investors are panicking and selling off their assets before everything crashes further. A trade war with China, a global pandemic, an actual war in Europe, oil prices above 100, and worldwide inflation, it seems like if you are not going to sell now, soon your investments will be worth pennies. But that is not what one of the greatest investors in the world thinks. Warren Buffett is advising investors to not panic, but to look for great deals in the market. At the height of the 2008 financial crisis, when banks were falling down one after another, Buffett pumped $5 billion into Goldman Sachs shortly after Lehman Brothers collapsed. It literally saved the bank since investors lost confidence in the systems. And here, the most respected investor is throwing billions into Goldman Sachs. In exchange, he received $5 billion in preferred stock paying a 10% annual dividend. That's $500 million of cash every year, as well as warrants enabling him to buy 43.5 million of Goldman's common shares at $115 each at any point in the 5 years period. I'm sure many people must have called him a fool for making such moves, but not too long after that, in 2011, Goldman bought back the preferred stock for $5.64 billion and handed Buffett a $500 million bonus. So, since we are in the middle of another crisis, a crisis that could end up much worse than the 2008 crash, where some companies already began going bankrupt before the recession officially started, here is the question. What are the assets that will keep generating income not only during the crisis, but even after? But before we get into that, kindly give this video a thumbs up and hit the subscribe button if you haven't done so. It's free and helps this channel tremendously. Number 1. Farmland. When you think of Bill Gates, you think of a tech billionaire who is focused on developing technologies that would revolutionize the world. He became a billionaire in his 30s after founding Microsoft, one of the largest tech companies in the world. You would never connect Bill Gates to farming. However, last year, he aggressively began buying farmland. He has amassed nearly 270,000 acres of farmland across the country, which means he owns more land than the entire city of New York. Farmland doesn't sound as cool as a tech startup, but at the end of the day, you can't eat your iPhones and MacBooks to satisfy your basic needs. Jeff Bezos is another example. After successfully building the largest e-commerce platform, he has purchased 420,000 acres of land, mostly in Texas. As Mark Twain once said, buy land. They are not making it anymore. It is a limited resource. Your stocks or crypto can go down by 50% overnight because of an economic crisis, but you will never wake up one morning finding out your farmland is worthless. Americans make up just 5% of the world population, but consume most of the world's resources, especially food. But now, the world is on the brink of a hangar. According to IMF, the world economy is at risk for a food crisis as a result of unprecedented supply disruption caused by the war in Ukraine. Ukraine and Russia are some of the biggest exporters of grain, which are halted as a result of the conflict. This caused a worldwide shortage of food. So oil prices aren't the only source of global inflation. What is certain about the future of humanity is that wars have always been part of human history, and the demand for food will never go away, as long as they are humans. Which is why billionaires across the globe, especially in the US, are arguing for farmlands. Number 2. Royalties. If you have watched Shark Tank, You are familiar with royalty deals that are often thrown away by Kevin O'Leary. Instead of asking for a bigger pie of the economy, Kevin O'Leary is known to go after royalties. But the question is, why? You see, when you invest in a company, you become one of the shareholders. It is in your best interest for the company to grow so that one day you are either sell your piece of the pie and finally enjoy the fruits of your labor, or the company will finally get profitable and share the profits with you. However, that might never happen. Uber is a $43 billion company that is still bleeding cash. Facebook, the largest social media company in the world, has never paid a dime in dividends. But unlike equity with a royalty deal, investors will always be on the winning side. A royalty of 10% of sales on all products would mean that if a firm sells $1,000 worth of goods, they would have to pay $100 to the party they have a royalty deal with. Even if the business is bleeding cash, the investor will still be making a profit as long as there is revenue. Whenever a computer manufacturer sells a PC with the Windows operating system preloaded on it, they pay a royalty fee to Microsoft. There are different kinds of royalties, from intellectual properties such as patents to franchise rights that are often used by chain stores to leverage their products and services. Royalties guarantee cash on the table regardless of the outcome of the business. Number 3. Bonds. Holding bonds in the last 3 years seem very unappealing as low interest rates made bonds so unattractive that literally almost any other investment easily outperformed bonds. Since the beginning of the pandemic, 10-year bond rates were less than 1%. I mean, that's lower than the inflation rate. You are guaranteed to lose money. However, as the age of cheap money came to an end, bond rates began to shoot. They are now as high as they were in 2018, floating around 3% to 3.5%. That's definitely lower than the inflation rate. However, that's still far better than 0.5%, and if the Fed keeps raising rates to finally end the highest inflation in 4 decades, bond rates will only rise. I wouldn't be so surprised if bond rates would be double by the end of the year. When everything is crushing, government bonds don't just put cash on the table regardless of the circumstances, but also keep growing. And moving on to number 4, stocks. Don't let the storm push you away from the markets. Whenever everything is booming, it's easy to make money because everything is growing anyways. The real challenge comes when a storm hits the market, as is the case now. Stocks might not seem attractive, but this is not the first storm. During the dot-com bubble, stocks like Amazon lost like 90% of their value. During the 2008 financial crisis, markets across the globe were crashing. And what's happening now is yet another crisis. The storm will definitely clean the market from inefficient companies, but those who provide real value will prevail. And a storm is an opportunity to purchase these stocks at a great discount. But while you are considering buying those stocks on sale, be careful to do your due diligence on the company first. And lastly, number 5, private businesses. Private businesses make up almost half of the US economy, 44% to be exact. A great number of them struggled tremendously during the pandemic, especially restaurants, individual stores, and small businesses. Those who survived are yet to overcome another challenge, a challenge of high inflation, high interest rates, and lower demand. It is not a surprise we will witness a lot of bankruptcies in the coming future. Not because these businesses are bad, but rather because they simply don't have the airbag to withstand the crisis. So big businesses will most likely jump in to acquire them since they will easily become money-making machines once the storm passes. I hope you enjoyed this video. Make sure to give it a thumbs up, hit the subscription button, and turn on the bell notification so don't miss any future videos. Thanks again for watching. Until next time, this is Wealth Street.